Here's something that'll blow your mind. When a bank gives you a loan, they're not handing you money that already exists. They're creating brand new money that didn't exist 30 seconds ago. And I'm not talking about printing bills. I'm talking about conjuring dollars into existence with a few keystrokes on a computer. This is legal. It's happening every single day, and almost nobody understands it. Let me walk you through exactly what happens when you take out a car loan for $20,000. You walk into the bank, fill out paperwork, they approve you, and boom, $20,000 appears in your checking account. Now here's the question everybody gets wrong. Where did that money come from? Did it come from someone else's savings account? Did the bank withdraw it from their vault? Did they borrow it from the Federal Reserve? Nope, none of that. They literally created it out of nothing. The loan officer didn't go to the vault. They didn't call another customer and ask to borrow their deposit. They typed some numbers into their computer system, and 20,000 brand new dollars came into existence. Your loan created the money. The money didn't exist before you borrowed it. I know this sounds insane. It sounds like I'm describing a scam. But this is exactly how the banking system works, and it's been working this way for generations. It's called credit creation, and it's the primary way new money enters our economy. Not the Federal Reserve printing bills, that's actually a tiny fraction. The real money creation happens when regular people like you and me walk into banks and take out loans. Here's why this matters to your wallet. Every single dollar in your bank account was created because somebody, somewhere, went into debt. Think about that. The money you earned at your job, the money you've saved, the money in your retirement account, all of it started as someone else's loan. That's wild, right? Our entire money supply is just a giant pile of debt with interest attached. And here's where it gets dangerous. When you pay back that car loan, guess what happens to the money? It disappears. Poof. Gone. The principal payments you make literally delete money from existence. The only thing that stays in the economy is the interest the bank collects. So for the money supply to keep growing, people have to keep borrowing more and more and more. This is why I am absolutely fanatical about staying out of debt. You're not just borrowing money, you're participating in a system that requires constant debt expansion to function. When borrowing slows down, the money supply contracts, the economy shrinks, and people lose jobs. The whole thing is built on a foundation of ever-increasing debt. So when your buddy says debt is a tool, you can tell him, yeah, it's a tool that creates the money supply and keeps you trapped in the system. The banks aren't lending you their money or someone else's savings. They're creating new money and charging you interest on money that didn't exist until you asked for it. That's not financial freedom. That's financial bondage. And the only way out is to stop playing the game entirely. Pay off your debts, stay out of debt, and build wealth the old-fashioned way, with actual money you actually earned.